Welcome to the deep dive. Today, we're taking a closer look at Sea Limited. You know, the big consumer internet company active across Southeast Asia and, well, increasingly making waves globally.
That's right.
We've got their 2024 annual report right here. It's our main source. And it's pretty detailed, gives a real look under the hood.
Mm-hmm. It lays out quite a bit.
Yeah, so our goal today is really to pull out the key stuff. How are the different parts of their business actually doing? What story are the financials telling us? And crucially, what's their plan for creating shareholder value going forward?
Sounds good. Sea Limited fundamentally is built on three pillars. You've got e-commerce, which is Shopee, then digital financial services, that's Sea Money, and finally digital entertainment under Garena.
Three distinct areas.
Very distinct. And each has its own market, its own growth strategy, and of course its own set of challenges. All of which, as you said, are covered in this 2024 report.
Okay, so let's kick off with Shopee. That's the e-commerce side. It's seen just phenomenal expansion using that marketplace model, basically connecting buyers and sellers.
Right, the classic marketplace. But they've also been pretty clever adding social features, even gamification, into the app itself. It helps keep people engaged, sticky.
And the scale is, well, it's huge. The report puts their 2024 GMV gross merchandise value at US $100.5 billion.
Billion, yeah.
And that's across, what, 10.9 billion orders? Just a massive amount of activity.
It really is.
So how does Shopee actually make money from all that volume?
Well, there are several levers they pull. Paid advertising is a big one. Sellers pay to get their products noticed. Then there are transaction-based fees, so Shopee takes a small cut of each sale.
Standard stuff for marketplaces.
Pretty standard, yeah. Plus, they offer value-added services, things like logistics and fulfillment, and charge for those. And interestingly, they also do some direct sales themselves through official stores.
Ah, so they actually buy and sell goods directly too.
In some cases, yes.
Okay.
It lets them target specific product categories and maybe capture a bit more margin there.
Okay, so they've built this massive engine, but, you know, with that kind of success, there must be some significant challenges, some headwinds. The report mentions competition heating up.
Oh, absolutely. The competition isn't just other big e-commerce players anymore. It's coming from social media platforms getting into commerce, search engines, even traditional retailers who are, seriously beefing up their online game.
Right, everyone wants a piece of that pie.
Exactly. So Shopee needs to keep innovating just to stay ahead. And the report also highlights internal challenges too. Managing risks tied to third-party sellers is a big one.
Like product quality or counterfeits.
Yeah, quality, prohibited items, and definitely intellectual property issues like counterfeits. Then there's the sheer complexity of logistics getting goods delivered reliably across all these different markets.
Must be tricky.
Very. And on top of that, they mention investigations by competition authorities related to their logistics services. So regulatory pressure is definitely part of the picture too.
So those huge GMV numbers are impressive, but yeah, it sounds like staying on top requires constant effort.
Constant vigilance, constant adaptation. Definitely.
Okay, let's pivot then. Let's talk about Sea Money, their digital financial services arm. Positioned as a leader in Southeast Asia and now making moves in Brazil too.
That's right. They're building a significant presence.
Yeah.
And their service range is quite broad. It covers payments, digital banking, lending, even InsurTech.
And how are they growing this? What's the main driver?
A huge factor is the integration with Shopee. It creates this powerful sort of ecosystem. If you're already using Shopee, paying with Sea Money is just seamless.
Makes sense. Reduces friction.
Exactly. It drives adoption of the Sea Money wallet. But it's not just payments. Their lending side is becoming quite important. They offer short-term consumer loans. The average size was pretty small, around US $18 end of 2024.
Only $18.
Yeah. Small ticket, high volume, presumably.
Yeah.
And they also provide loans to the SMEs, the small businesses selling on Shopee.
Okay, so leveraging that existing seller base.
Right. So user acquisition comes both from within Shopee
Yeah.
and from actively acquiring customers outside the platform too.
Now, dealing with financial services, that must mean navigating a real maze of regulations, right? The report mentions risks across Indonesia, Thailand, Singapore, Malaysia, Brazil.
It's incredibly complex. Each country has its own regulators, its own rules for licensing, data protection, consumer protection.
Yeah.
It's a major operational challenge.
A real juggling act.
Definitely. You're dealing with central banks, financial services authorities, like Bank Indonesia and OJK in Indonesia, MAS in Singapore, Bank Negara in Malaysia, the BCB in Brazil. Staying compliant everywhere requires significant
Yeah.
resources.
And what about the risks inherent in lending, like people not paying back?
Yes, credit risk is a major focus in the report. They have to make provisions, set aside funds for potential loan losses, and have robust collection processes. Plus, things like changes in interest rates can directly impact the profitability of their loan book.
And they do insurance too.
A bit, yes. Brokerage, agency, some underwriting. It adds another revenue stream, but also another layer of regulation to manage.
Okay. Let's touch on the third leg. Greena, digital entertainment. They started back in 2009, and obviously Free Fire is their massive global hit game.
Huge hit, yeah. Mobile gaming powerhouse.
And their model is mostly freemium, right? How does that work, and what are the key challenges there?
So freemium means the game itself is free to download and play. Garena makes money selling virtual items inside the game, skins, characters, things like that.
Got it.
Which means the whole model relies heavily on having a massive and engaged player base. That's why they track metrics like quarterly active users, QAUs, and quarterly paying users, QPUs, so closely.
Makes sense. More players, more potential buyers, but the gaming market is notoriously competitive.
Incredibly so.
Yeah.
New games pop up constantly, so Garena's big challenge is to consistently develop or acquire games that capture your players' attention and keep them playing. They also rely quite a bit on third-party developers for licensed games.
And regulations again.
Yep, adapting to local gaming regulations in different countries is ongoing. And then there are reputational risks. Public discussions about online gaming can sometimes be negative. Plus, managing those virtual economies inside the games to prevent fraud or manipulation.
Okay, so that covers the three main business segments. Let's dig into the financials now. What did the numbers look like for 2024?
Right, the numbers. So total revenue for 2024 hit U.S. $16,819.9 million, almost $16.8 billion.
And the breakdown, where did that come from?
The lion's share, 64.6%, came from e-commerce, from Shopee. Digital financial services, C-Money, chipped in 14.1%, and digital entertainment, Garena, was 11.3%. There's a bit from other services and direct sales of goods making up the rest.
That Shopee contribution is huge. How does that compare to previous years? Is the mix changing?
It is. Total revenue has grown strongly year over year. It was U.S. $12.4 billion in 2022, then U.S. $13.1 billion in 2023, and now this jumped to nearly U.S. $16.8 billion in 2024. But yeah, the proportion from Garena digital entertainment has been shrinking. E-commerce and financial services are becoming much more dominant in the mix.
Interesting shift. What about gross profit?
Gross profit also saw good growth, U.S. $7.2 billion in 2024, up nicely from U.S. $5.8 billion in 2023.
But I think I saw the margin dip slightly.
You did. Good catch. The gross margin went from 44.7% in 2023 down to 42.8% in 2024. And the report says that's mainly because of that shift in the profit mix you just mentioned, less contribution from the higher margin Garena business.
Right, okay. And operating expenses, where are they spending money?
Well, sales and marketing is a big chunk, nearly U.S. $3.5 billion. That increase was driven mostly by spending to acquire and retain users for Shopee and C-Money.
Investing growth.
Exactly. General and administrative expenses also rose to about U.S. $1.3 billion. That was partly higher staff costs, but also some one-off expenses for settling those securities class action suits.
Ah, okay.
And the other significant one was provision for credit losses that jumped to U.S. $776.9 million, which makes sense given the growth in their lending business we talked about. More loans means potentially more losses to provision for.
So higher costs, but what about the bottom line, net income?
That's where the really positive story is. They reported net income of U.S. $447.8 million in 2024.
Which is a big turnaround, right? Weren't they losing money before?
Huge turnaround. Compare that to U.S. $162.7 million net income in 2023, which was already an improvement, and especially compared to the U.S. $1.7 billion net loss back in 2022.
Well, okay, so they're solidly profitable now.
Well, profitable in 2024, yes. And it's worth noting they also paid income tax about U.S. $321 million, mainly from the profitable e-commerce and digital financial services parts. That's another sign those segments are maturing.
What about cash flow? Did that improve too?
Yes, significantly. The cash flow statement shows a substantial increase in net cash from operating activities in 2024. That's a really healthy sign, suggests the underlying business is generating more cash.
Good. And investments.
Debt. They detail their capital expenditures and investments. On the financing side, one notable thing in 2024 was repurchasing some of their convertible senior notes. Helps manage debt.
And the balance sheet overall, how does it look?
Pretty solid, actually. As of end of 2024, total assets were U.S. $27.9 billion, up from U.S. $23.5 billion the year before. They had a strong cash position, US $6.6 billion in cash and equivalents, plus another US $6.2 billion in short-term investments.
Lots of flexibility there.
Definitely. We also saw that increase in net loans receivable, reflecting the lending growth that stood at US $426 million. Liabilities were US $14.1 billion against total equity of US $13.7 billion. So a healthy structure overall.
And free cash flow, did they mention that specifically?
They don't state an explicit SCF number in the summary sections we're looking at, but given the strong rise in operating cash flow, even considering CapEx, the trend looks positive.
Okay, so financially things seem to be moving in the right direction. Profitability is back, cash flow improving. What does the report say about their plans to create value for shareholders directly? Things like dividends or buybacks?
Right. On dividends, the report is very explicit.
Yeah.
Don't expect any soon. They state clearly they don't anticipate paying cash dividends in the foreseeable future.
So reinvesting everything back into the business.
That's the plan. Retain earnings to fuel growth. Which means, for now at least, shareholders need to rely on potential share price appreciation for returns.
Okay. What about buybacks then? You mentioned they repurchased some convertible notes.
Yes, during 2024, they bought back about US $329.4 million worth of their 2026 convertible notes. As of late March 2025, there was still about US $1.33 billion of those notes outstanding.
And repurchasing those helps how? Reduces potential dilution.
Exactly. It can help manage potential future dilution when those notes convert to shares, and it's generally seen as optimizing their capital structure. So it's a form of returning value. Indirectly, perhaps.
And the report also mentions a share incentive plan from 2009. How does that fit in?
Ah, yes, the share plan. That's primarily a tool for attracting, retaining, and motivating employees, officers, directors. It lets them grant share-based compensation, like stock options or restricted stock units.
Aligning management with shareholders.
Precisely. The idea is to give key people a stake in the company's success. The number of shares available under this plan actually increases automatically each year by 3% of outstanding shares at the start of 2023, 24, 25, and 26.
So it's quite significant.
It is. The total pool is over 228 million shares now. And it's a real expense. Share-based compensation cost them US $715.8 million in 2024. But the company views it as a crucial investment in their people, essential for hitting those long-term goals and, ultimately, building shareholder value.
Okay, so let's try and bring this all together. Based on this deep dive into the 2024 report, how do we assess Sea Limited's business as we look ahead?
I think overall you have to say the trajectory looks positive. Achieving net profitability is a major milestone, especially after those earlier losses.
But there's always a but, right?
Well, yes. The report itself is very clear about the numerous risks they face. Macroeconomic factors, constantly changing regulations in all those different countries, fierce competition across all three segments.
Security breaches, fraud.
All of that. And they explicitly state, just because they were profitable in 2024 doesn't guarantee they'll stay profitable. There are still significant hurdles.
So a cautious optimism, maybe?
I think that's fair. Their stated focus is definitely on long-term growth, building a sustainable business. But success hinges on continuing to grow that user base and keeping users engaged across Shopee, SeaMoney, and Garena. That engagement drives revenue across the board.
And things like currency fluctuations must matter too, with such wide international operations.
Absolutely. Foreign exchange risk is always a factor for a company this global.
Yeah.
So in summary, they've shown really impressive progress in scaling up and now achieving profitability. But they're operating in the very dynamic, very competitive emerging markets. Managing those risks while executing on growth plans will be key.
Right. So, key takeaways seem to be a diverse business model showing significant growth, especially in e-commerce and digital finance. They hit profitability in 2024. Focus is on reinvesting for growth, so no near-term dividends, but they are managing capital through things like note buybacks and using share incentives.
Yeah, that sums it up well. It feels like they've reached an inflection point. Achieving profit is one thing. Sustaining it while navigating all these complexities is the next big challenge. Their big bets on Shopee and SeaMoney seem to be paying off, but competition and regulation aren't going away.
Okay, a really thorough look. And that brings us to our final thought for you, the listener. Considering those complex regulatory environments across Southeast Asia and Brazil, and the really intense competition Sea faces in e-commerce, finance, and gaming, what do you think is the single biggest long-term strategic challenge Sea Limited absolutely has to overcome to keep this growth going and really cement itself as a top global consumer internet company?
That's a tough one. Lots to consider there.
Definitely something to mull over. We encourage you to explore Sea Limited's annual report further if you're interested, and keep an eye on this incredibly fast-moving consumer internet space. Thanks for tuning in to this deep dive.